Greetings from the Charter School Office. I am Albert Bertram, the Finance Specialist for the office. So this document was last year a piece of the annual report that we put out. So this year, due to the conflicting time dates, we separated academics from this piece this year. So and then this is a new delivery method. In the last year, we also had the regional board trainings where we handed these out and then provided these. So we're bringing the video right to you, and it's going to include your actual school's information. So we hope you enjoy it. Let us know if you have any feedback, please. So getting started on the report now. This is a summary of the audit, and there's also a couple other calculations and components done on this sheet. So I'll kind of go through that, and then I'll show you where some things are located on the audit, so you can look it up. So we'll start here with the statement of net position. So these are all derived from the audit. So to show you that, we'll use total assets as an example. So total assets is listed as 1,019,100. So we'll go to the audit. Then here's our statement of net position. And then if you go down to total assets, you'll see 1,019,100. So that's total assets. So if you wanted to come back and verify these numbers, you could do so. These are directly from the audit. So we'll go back to our sheet for a moment. So the ending net position is the June 30th, 2014 net position, and then the previous net position is the June 30th, 2013 ending net position. So that lets you compare from year to year pretty well. And then this whole sheet lets you compare from year to year. So when the sheet comes out each year, you can compare from year to year a lot easier and not have to bust out the big audits and look through the big audits. So that's kind of why we use it in our office. So as we move down, we'll see that this area is labeled balance sheet, current assets. So these are general fund current assets. That's what these are. And then balance sheet, general fund classification. So I'll go back to the audit for a moment to show you where this is at. So the balance sheet is 2 pages after the statement of net position. So 1, 2. There's where it says balance sheet. Now the balance sheet shows multiple funds. So you see the general fund and then the school service fund if there's a debt service fund. All the funds will be shown here. And then the total governmental funds. So for this part of the sheet, we're just looking at the general fund column. So it's important to note that we're just staying in the general fund column. And then, so here's our assets. And then if we go down, here's our fund balance classifications. So it is important to look at the school service fund. Just for this part of the sheet, we're just looking at the general fund. So we'll go back to our review sheet. Here's the assets. Over here, here's the fund balance classification. So just to make sure everyone knows what these are, committed fund balances are amounts constrained to specific purposes by the board to be reported as committed. Amounts cannot be used for any other purpose unless the board takes action to remove or change the constraint. So that's what committed is. These definitions are derived directly from the audit. You can find them in the audit. And then unassigned are amounts that are available for any purpose. These amounts are reported only in the general fund. So there's our unassigned and committed. So if we go up, this little box or table shows the activity during the year. So the beginning general fund balance, the revenues, expenditures, if there was any other financing sources, and then net change, and then the ending general fund balance. So let's kind of give you a quick snapshot of what happened during the year. It's a very broad summary. So on page 2, this will be broken out into more detail so you could see what happened in more detail. So below that, we have our general fund divided by revenue, which is the ending general fund divided by the revenues. General fund less restricted is going to do the same calculation, except we'll subtract a restricted amount if there were a restricted amount down there. And then general fund divided by expenditures is the ending general fund divided by total expenditures. So I think that I believe that this calculation was included on the governor's budget proposal in the last state aid update. So the state kind of looks at this one. We like to look at this one because if there was a large capital outlay during the year, that could skew the expenditures line item. So it's important to look at both, especially if the state's looking at this one and we're looking at this one, but just know what's going on. Now, we do take the NHA management agreement in consideration, so where we would like to see other schools trend up, we kind of understand what the relationship is. So just so you know, but we wanted to make sure you knew what these calculations were and that this one is included in the, maybe included, I shouldn't say is, it was included in the governor's proposal on the last state aid update. So, and then this bottom one is ending general fund divided by beginning, just takes the ending, divides by the beginning. If it's below 100%, then there was a negative net change. If it's above 100%, there was a positive net change. So there was a negative net change. That's why this is below 100%. So moving down, these 4 boxes are a summary of the note section of the audit. These are blank because they're part of the template, even though there's no information included. So notes payable would have been associated with any short-term borrowing, state aid note from the state, or long-term debt would be a bond financing, revenue bond for a building. Some schools utilize that method, others utilize the capital operating lease method. So NHA schools usually, I won't use absolutes, but usually utilize the leasing method. So that's where this is derived from. So the information is in the notes in the audit, and then those notes are listed in the page 4 of this sheet. So we'll get down there, but that's where this number comes from. It comes from the notes on the audit. So over here, usually if there's a management fee amount expressly stated in the audit, I usually include that here along with any management contribution, or if there's any management fees waived. But with the NHA agreement, there isn't anything expressly stated on the audit. So that's why this says NA, and that's why these values come up with errors, because there's no numeric number up here. It's words, or letters, excuse me. So that's what that's about. Total square footage. If this is inaccurate, please let us know. It affects a couple calculations, so we hope that that's up to date. So utilizing that square footage number, we calculate revenues per square foot, expenses per square foot, the difference, and then so if there's a large capital outlay, just know that this would be skewed, and then you can look at this from year to year to kind of compare if this is trending upwards, downwards, if it's remaining the same, and then payment per square foot takes the lease payment and then divides that by the square footage. So this is kind of a means of comparing schools that utilize bond financing to leasing financing. The average for Bay Mills schools, so all of the Bay Mills schools, both leasing and bond, the schools, the average is $14. So this is pretty close to the average. And then operations and maintenance per square foot takes the line item down here of operations and maintenance, divides that by the square footage, and then that's $23. The average for Bay Mills schools is $18, so that's a little bit above, but pretty close. And then square footage divided by fall 2013 is the just takes the square footage, divides by the fall 2013 count, which is the corresponding count to this fiscal year. So, and then that fall count information is going to be listed on page 3 of this sheet, so we'll get down to that too. So the next page, the general fund comparison, just takes that snapshot in the upper right hand corner of page 1 and then breaks it out into more detail on this page. So you can see the actual as of June 30th, 2014, the actual as of June 30th, 2013, the difference, and then that's revenues, and you can do the same for expenditures and other line items down here. So if you notice, some of these have numbers in front of them and some of them don't. If they were part of my template, they'll have numbers. If they weren't part of my original template, then they won't have the numbers in front of them, because I didn't come back and add all the numbers for some of the ones that I changed. So but if you want to know what the numbers were, or you don't know what one of these line items are, I'll show you a quick trick to figure out what they are. So first you have to go look up the accounting manual. You put that in Microsoft Word, and then this is Word 2013. So you push the Find button up here in the upper right hand corner, or you can hold Control plus F and then come over to the navigation bar. Make sure you're on Results. Type in what you're looking for. We'll use Basic Programs as an example. Then you can just move through this document and find what you're looking for. Excuse me. Now you can't do something broad like instruction, because it's in here too many times. But if you focus your search, it's a pretty good tool to find things. So here's the accounting code for basic programs. Basic programs are instructional activities including enrichment designed primarily to prepare pupils for activities as citizens, family members, and workers, as contrasted with programs designed to improve or overcome physical, mental, social, and or emotional handicaps. So, and then it goes on and includes pre-kindergarten. Then you could scroll down and you could see how it's broken down, 111, 112, 113. We won't get into that for time, but if you wanted to do that, that's a quick way to do it, and it's a good tool. So if you don't know what anything is down here, make sure you get an understanding of what it is, and then you can compare from year to year, whatever you're looking at, whatever line item is you're looking at. So that's that. Then the ending fund balance should match up with the box in the upper right hand corner. Moving into the next section, the budgetary comparison. This takes the original budget, the final budget, and then the actual. This is derived from the audit. And then this budget difference is the difference between the actual and the final. And then the percent change is the percent change from the actual to the final. And then this note here is the just states that the Uniform Budgeting Act says that the original budget is due July 1, which in many cases there's a large discrepancy between the original budget and the final budget because the count date is actually after that original budget is due. So it's important to know what that date is and why that is the way it is. Excuse me. So moving down here, the instruction is percent of revenues. This shows a little trend with the calculation. So I'll show you what this calculation is. Go up here. So this takes total instruction expenditures, divides it by total revenues, and then lets you compare from year to year. So if we go down, we'll see that it trended from 46.55, 47.48, and then 47.06. So if we go back up, you'll see that it trended slightly down from 0.48 to 0.06. You'll see that revenues declined slightly, and then expenditures declined slightly. So this is kind of a proportional thing. It's not meant to be an absolute, but it's a good comparison to look at. So what percentage of your revenues are you utilizing on instructional costs? So some examples, an example of something that could impact this that's not necessarily implied to be a negative thing is if you had a teacher that was getting paid $50,000 and he or she resigned or retired or whatever, and the new teacher was hired for only $30,000, that would actually lower your expenditures while actually not providing less instructional services. So it's important to note that there are situations that this could decline when it's not necessarily a negative thing. So it's kind of important just to look at the numbers and then ask why that happened or whatever. That's what it's meant to do. It's meant to be an indicator, not an absolute. So yeah, just kind of be aware of that. I think the average for 2014 for Bay Mill schools was 44. So Great Oaks is actually slightly above the average. So revenues divided by fall 2013 takes the total revenues divided by the fall 2013 count. Same with expenditures, and then the difference. So that's something to look at from year to year and see how the trend is comparing. So just another calculation. And then enrollment numbers. These numbers are derived from CEPI. So before I move forward, I'll explain what CEPI is because I don't like all the acronyms in it. I don't always remember all the acronyms in education. I shouldn't say I don't like them, but CEPI stands for the Center for Educational Performance and Information. It's a state-operated site. So you come down here, you go My School Data, and then you could go through a couple filters of what you're looking for. If you look for student count, free and reduced lunch count, special education count, etc. And then you could find all these large spreadsheets, which I won't open up right now because they're really large spreadsheets. But I've gone in there and dug the data out for you. So go back to our sheet. That's where these numbers are derived from. The very last one is a number I received through Epicenter, which is the file retrieval program utilized between the charter school office and the school. So that's how documents are sent to the charter school office utilizing this program called Epicenter. And so this number came on a sheet or on a form that's called the DS 4061 form, and it's an unaudited number during count time. And so this is subject to change once the audited numbers come out. So just so you know. And then over here, this is the percent change from count to count for a numbers type person who likes numbers. And then down below that we have a graphical portrayal of the data. So this shows the count data in a graphical manner. So that's what that is. Below that we have free and reduced lunch counts. These are derived from CEPI as well. And then over here, this is the percent free and reduced lunch. So this takes the free and reduced lunch count and divides it by the corresponding fall count. And then that's where these percentages are derived from. So, and then below that we have a graphical display of the free and reduced lunch counts. So, moving into page 4. This is the debt section. So this kind of encompasses anything related to debt or anything like that. So just a couple. This is derived directly from the audit again. Page 6 is where this capital assets information is, and then page 16 is the operating lease information. So that's where the number is on page 1, where it's talking about the lease. That's where it's derived from. So we'll scroll down. Here's the management company note in the notes section. Page 12, if you want to go look it up in the audit. There's no findings, which is good. And then BMCC notes just essentially takes into consideration anything that's not debt related or management company related. So there's a couple notes here. So page 6 talks about the spending account for the board of directors, and then the charter expires on June 30th, 2020, according to page 12 of the audit. So this information is reviewed by Mariah Wanick in our office. So and if you have any questions, my email is albertb@bmcc.edu. Feel free to email if you have any questions, comments, or concerns. We hope you enjoyed the video, and we hope that you enjoyed it more than the regional board trainings. And we thank you for what you do for the children of Michigan. Have a good one. Take care. Bye.